Hello friends, how are you? Hope you are doing well. In continuation with our discussion related to ESG, sustainability and climate change questions and answers. Next question is, what is a sustainability triple bottom line? So the concept behind the triple bottom line is that the companies should focus as much as on social and environmental issues as they do on the profits or financials. The triple bottom line aims to measure the financial, social, and economic performance of a company over time. Then, next topic is, what is the purpose of the green financing? Green financing purpose is, as stated by the United Nations Environmental Program, is to increase the level of financial flows from banking, from microcredit, insurance, and investment, from the public, private, and not for profit sectors to the sustainable development priority. Basically, we are focusing on the sustainable development priorities for the green financing. The aim is to align the financial system, working with the country's financial regulators and financial sectors to direct the capital allocation to the sustainable development initiatives, and that will shape the production and consumption patterns for tomorrow. Next is, what is the relationship between ESG communications and sustainable finance? So sustainability or ESG communication acts as a catalyst to the capital raising activities. So sustainable financial activities or initiatives such as issuance of the green bonds or social bonds advocates the sustainability story. Moreover, prior to bond issuance or loan applications, lenders or investors will certainly look or check. What they will look at the company's ESG profile to monitor its sustainability commitments. What can be the different type of bonds? Generally we discuss green bonds, social bonds, sustainability bonds, sustainability linked bonds, green loans, sustainability linked loans. So these are certain examples of different ESG communications. What is the green bond principle? Green bond principle. So this global sector specific initiative called Green Bond Principle are voluntary process guidelines that recommend transparency and disclosure and promote integrity in the development of the green bond market by clarifying the approach for issuance of the green bond. Similarly, what is the meaning of climate bond initiative? So this is again a global sector specific initiative where the climate bonds initiative is an international organization working solely for mobilizing the largest capital market of all, the 100 trillion bond market for climate change solutions. So the organizations promote investment in projects and assets necessary for a rapid transition to a low carbon economy and climate resilient economy. So the strategy is to develop a large and liquid green and climate bond market that will help to drive down the cost of capital of the climate projects in developed and emerging markets. So what is the meaning of green bond? Green bond work just like any other corporate or government bond. So borrowers issue these certificates and securities to secure financing for projects that will have a positive environmental impact such as ecosystem restoration or reducing the pollution. Then investors who purchase these bonds can expect to make a profit as the bond matures, and in addition there are often tax benefits for the investing in the green bonds. Now what is the meaning of climate bond? Climate bonds are fixed income financial instruments which are used to fund the projects which have positive environmental and climate benefits. So climate bonds specifically finance projects those reduce carbon emissions or alleviate the effects of the climate change. So while green bonds represents a broader category of instruments related to the projects with a positive environmental impact. Next very interesting definition is about what is the meaning of fiduciary duty. So fiduciary duty is a legal term which means is that's a commitment to act in the best interest of another person or the entity. Broadly speaking, a fiduciary duty is a duty of loyalty, or you can say duty of care. So the fiduciary must act only in the best interest of a client or the beneficiary. So what is the meaning of fiduciary? Fiduciary means trust and a person with a fiduciary duty and has a legal obligation to maintain that trust. For examples, lawyers have a fiduciary duty to act in the best interest of their clients. Similarly, physicians, doctors have a duty of care to and act in the best interest of their patients only. Next question is about what is the meaning of ESG intelligence tool. ESG intelligence tool is an industry business intelligence platform which is being used to assist the companies across all sectors to monitor and report their environmental social governance performance. So this is an artificial intelligence tool, or you can say intelligence tool, which is a software or which can be a web-based platform, which is an industry business intelligence platform used to assist the companies, support the companies across all sectors. For what? To monitor and report their ESG performance. Now, what is the meaning of ESG risk? ESG risk includes those related to the climate change, impacts, mitigation, adaptation, environmental management practices, and duty of care related to working and health and safety conditions, respect for human rights, anti-bribery, anti-corruption practices, and compliance to the relevant laws and regulations. So this risk is related to different business aspects. Question number next. What are the steps to integrate ESG risk into the enterprise risk management? So ESG, how we can integrate with the enterprise risk management? So ESG risk management addresses numerous operational criteria. Those go beyond standard business and financial risks that every company faces. An ESG risk management program allows an organization to develop a business model that is customized or tailored to manage various environmental social governance risks. So there are different type of risks associated with the business which can be counted as ESG risk, like operational risk, like litigation risk, financial risk, market risk, business continuity related risk, environmental risk, health and safety risk. So these are certain examples. So what are the risk identification and integration steps for integrating ESG risk into the ERM, enterprise risk management? So let us see the steps. Governance and culture for ESG related risk. First of all, we need to set a governance or governance committee who can oversee the ESG related risk activities. Strategy and objective setting for ESG related risk. Performance for ESG related risk. So identify that risk, assess and prioritize the risk, and implement the risk responses actually. Then later on we can say review and revision for ESG related risks. Last but not the least, very important, capacity building, information development and information sharing, communications and reporting for ESG related risk. Next is, what is the benefit of ESG risk management process? So the companies, those understand their ESG risks, can better deploy the resources in advance and make responsible investments, address rising operating expenses, enhance employee retentions, and comply with the regulations more depthly. And these activities help creating greater efficiency and cost savings in the long run. Next, this ESG data helping the companies to engage in effective risk management objectives and risk management practices. This ESG data, what we are gathering from the stakeholders, the ESG data which is helping the companies to engage in effective risk management, and that allows the management teams to plan for compliance objectives, enhanced and voluntary disclosures, and risk mitigation strategy roadmaps, and that addresses threats before they happen. So we work to identify the future threats and we look for those opportunities or those actions to remove those threats or reducing or eliminating or reducing the risk associated with. So for the time being, we conclude our discussion now. We'll meet in the next session. Thank you.